Using dividend income to cover expenses such as rent is one of the dreams for many dividend investors working hard to build a portfolio which pays such amounts of dividend income on a monthly basis. But unfortunately for most dividend investors, this could take years or decades, considering most of the popular high-quality dividend growth ETFs out there only pay around 1 to a 4% yield, which means an investor would need a boatload of money invested to receive the type of dividends to cover a huge bill, such as rent. But what if there was a newer ETF that uses a covered call strategy to generate massive dividends on a monthly basis? Dividends so huge that almost any everyday investor could become a potential income-producing beast almost overnight. Well, stick around because in this video we're going to go over exactly that and show you the exact math on how under $30,000 invested into this new dividend ETF could in theory generate enough income to cover the average rent in America. Now stick around because we have a lot to go through. Right after you, please drop a like in this video and subscribe for more future content like this. So first, just to get us all on the same page, it says right here from rentcafe.com that the average rent in America is around $1,702 per month. And even though I'm a huge fan of dividend growth ETFs like this one right here, the Schwab US Dividend Equity ETF known as SCHD, a dividend investor would have to have hundreds and hundreds of thousands of dollars invested into SCHD in order for the dividends to completely cover their rent on a monthly basis. But for a dividend investor looking to use dividends to cover their rent, there's no need to invest hundreds of thousands of dollars anymore. Ticker symbol TSLY from the YieldMax ETFs offers a distribution rate of around 70.74%. Yes, you heard me right, a distribution rate of around 70.74%. Now next you're probably asking, well, how in the heck does this ETF even work? Which is exactly what I'm going to explain to you right now. First things first, heading over to the YieldMax website where TSLY has all the information we're going to need. Wasting no time and opening up the YieldMax TSLY Tesla Option Income Strategy ETF Prospectus. It says investment objective. The fund's primary investment objective is to seek current income. The fund's secondary investment objective is to seek exposure to share price of the common stock of Tesla, or TSLA, subject to a limit on potential investment gains. Now, as far as fees go with this ETF, it is going to be a pretty massive fee of 0.99%, but as you keep watching this video, you're going to understand exactly why. It then says principal investment strategies. The fund is an actively managed exchange traded fund that seeks current income while maintaining the opportunity for exposure to share price, i.e. the price return, of the common stock of Tesla, or TSLA. Subject to a limit on potential investment gains, the fund will seek to employ its investment strategy as it relates to Tesla regardless of whether there are periods of adverse market, economic, or other conditions, and will not seek to take temporary defensive positions during such periods. So that's very important. No matter what happens in the market, TSLY is going to stick with the strategy and keep it moving regardless. Now, this is a very important part of this ETF, so listen closely. It says the fund uses a synthetic cover call strategy to provide income and exposure to the share price returns of Tesla, subject to a limit on potential investment gains as a result of the nature of option strategy it employs. The fund's options contract provide, number one, exposure to the share price returns of Tesla, plus current income from the option premiums and a limit on the fund's participation in gains, if any, of the share price return of Tesla. So next, this is also important. Why invest in the fund? The fund seeks to participate in a portion of the gains experienced by Tesla, which a lot of everyday investors, including myself, are definitely interested in too. The fund seeks to generate monthly income which is not dependent on the price appreciation of Tesla. So because of the synthetic cover call strategy, Tesla doesn't necessarily need to move up in price for the fund to generate a lot of money for investors, which is also very appealing. It then says although the fund may not participate in gains at Tesla's stock price, the fund's portfolio is designed to generate income from it. It then says an investment in the fund is not an investment in Tesla. This is maybe the most important part that a lot of people are getting very confused about. The fund strategy will cap its potential gains if Tesla's share increases in value. And that's because of the cover call strategy. Now, the fund strategy is subject to potential losses if Tesla's shares decrease in value, which may not be offset by the income received by the fund. So this is no different than any other cover call strategy for the most part. If the underlying loses a massive amount of value, even though the cover call seller has a bit of downside protection and earned the premium, it doesn't necessarily mean that the whole strategy isn't going to lose value. Also very important, it says the fund does not invest directly into Tesla. Fund shareholders are not entitled to any Tesla dividends. It says as part of the fund synthetic cover call strategy, the fund will purchase and sell a combination of standardized, exchange-traded, and flexible exchange call and put option contracts that are based on the value of the price returns of Tesla. In general, an option contract gives the purchaser of the option contract the right to purchase for a call option or sell for a put option the underlying assets like shares of Tesla at a specific price known as the strike price. Now, the synthetic covered call strategy is what this ETF uses. So it says in seeking to achieve its investment objective, the fund will implement a synthetic covered call strategy using the standardized exchange traded and flex option strategy above. So a traditional covered call strategy is an investment strategy where an investor, the fund, sells a call option on the underlying security it owns, and that's something that I do throughout my portfolios on a regular basis. A synthetic covered call strategy, something I don't do, is similar to a traditional covered call strategy that an investor sells a call option that is based on the value of the underlying security. However, in a synthetic covered call strategy, the investor, the fund, does not own the underlying security, but instead synthetically replicates 100% of the price movements of the underlying security through the use of various investment instruments. So the fund synthetic covered call strategy consists of the following three elements, each of which is described in greater detail further below. So a synthetic long exposure to Tesla, which allows the fund to seek to participate in changes up or down in the price of Tesla stock. Then on top of that, a covered call writing, where Tesla call options are sold against the synthetic long option of the strategy, which allows the fund to generate income. And then on top of that, some of the fund is going to be US Treasuries, which are used for collateral for the options, which also generate income. So now that you fully understand the strategy and exactly how TSLY, the YieldMax Tesla Option Income Strategy ETF works, looking at TSLY and the year-to-date performance for ETF price, it's up actually 6.39%. But on the max time frame, TSLY is down quite a bit, down 34.52%. But I know exactly what you're thinking. Even though TSLY is down as far as ETF price, the massive distribution rate and the massive dividends have definitely made up for the losses. And if you thought that, you'd be exactly right. To go over the previous payouts for TSLY, back in January, they paid out $1. In February, 90 cents. 90 cents in March. Then 83 cents, 44 cents, 80 cents, $1.07, and then as of recently, 83 cents per share. And remember, this is on a monthly basis for a stock that's around $14 per share. Now, if you remember towards the beginning of the video, we saw that the average rental price in America is around $1,702 per month. Now, if we wanted to figure out how many shares of TSLY, in theory, we would need to buy into in order to have TSLY's dividends completely pay for our rent on a monthly basis, we would take $1,702 and divide it by the last dividend payout from TSLY. The last dividend payout was 83 cents, keep in mind. And I know the dividends are going to be different on a consistent basis, but just for the sake of this video, we're going to be using the last dividend paid. And again, the future dividends for this ETF are likely going to be either much lower or much higher because of this ETF strategy and because of the more volatile nature. But again, in theory, if we took $1,702 and divided it by 83 cents, which is how much one share of TSLY pays in dividends on a monthly basis, at least that's how much it paid recently, we would in theory need 2,050 shares of TSLY in order to have the dividend completely cover our rent. Now, TSLY is currently trading at around $14.25 per share. I know, it's a very relatively cheap stock for how much dividend income it's offered so far. That means in theory, an investor would need just around $29,000 and some change invested into TSLY, going off of all the current numbers, in order to have their rent completely covered by the dividend. Now let's be real here, is it a good idea to invest this much money into a relatively highly volatile income generating vehicle in order to have the dividends cover your rent on a monthly basis? Now the answer to that is, well, it's totally up to you. For me personally, in my portfolio, I currently only have a few shares of TSLY, as well as a few of the other YieldMax ETFs as of right now. And this is simply because the volatile nature of the ETF and because it's relatively new. But I have seen other people on the internet that are investing hundreds of thousands of dollars into TSLY and other YieldMax ETFs. And because of doing this, their forward potential dividend income on a monthly basis could be absolutely massive. But either way, it's pretty interesting, and it does just go to show that there are different methods to get to the same place throughout the market. Now, I want to hear from you guys down below. Is something like the YieldMax Tesla Option Income Strategy ETF, ticker symbol TSLY, something that you would personally put in your portfolio? Comment down below, yes or no. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.